That's why you guys probably can't hear me. My microphone was muted. Can you hear me in YouTube land? Please let me know. Anybody hear me? Anywhere? Hello. Thank you, Justin D. Alright. Just kind of scrambling here this morning. Alright. Let me play these disclaimers and I'll be back in 90 seconds.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial and therefore investors should carefully consider their financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital venues are for educational purposes only and should not be construed as an express or implied promise or guarantee that you will profit or that losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment and host Apple Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41. Hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made that any account below is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results and all of which can adversely affect actual trading results.
This trade room and its webinars are not intended to mirror my trades or to give specific trade recommendations. The analysis and setups I share are trades and potential trades that I am taking for myself based on my personal analysis. The goal of this room is to see traders how to identify specific areas to trade within it for themselves, but ultimately the decision is yours. Trading is extremely risky, and if you do decide to follow my personal trades, you do so at your own risk and can potentially lose your entire account and even more. I'm not always profitable and have routine drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values that help me pinpoint exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices to enter trades, whether you want to go long or short. You have the ability to copy this spreadsheet and enter in your own values and use mine to confirm zone prices until you're able to draw the zones correctly yourself. The spreadsheet is not telling you which direction to trade, as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade. Alrighty. So good morning, Bookmap peeps. Let me make sure this volume's down. So again, if my internal, something with this YouTube broadcasting makes my volume, it picks up my internal volume on my computer. So when I adjust the my speaker volume, it doesn't make a difference. So I have to turn my internal volume way down. But if you hear, I turned off the squawk box as far as the announcements, and hopefully, I mean, it's not that big of a deal anyway because we're always last to know. Something comes out, the market moves 30 points, and then we find out what it is. But I turned that off so he's not talking over me. And then if you hear, things start firing off on tick strike. If they're overbearing and you can't hear me, just let me know because that's been an issue lately with this software. All right, so currently I'm short NASDAQ, 3 different strategies here, and we'll go over these. But there was get this off here. There's a couple stop runs here back to back. This one was threshold. Thought it was threshold. Better be threshold because I just traded off of it. Yeah, 213. So you had 213 buy stops here, and then you had another 118 following it. Technically I could make this one bigger zone. I like it like that. I mean, this is another 100, but that's not threshold. It's fine. I like it where I have it. Because this market should, if this moves higher, it's probably going to rip anyway. I'll give you the couple of reasons why, but as of right now, my strategies demand that I take this short, so I took a short. So 3 of the strategies that I took are all aggressive entries. So I have distinct rules in my trading based off these zones, whether I get in the minute it moves out of the zone versus waiting for a retest and then a failure of the zone. So I put on 3 different strategies. The DADA strategy, we'll go over all these. DADA, IZZY, these are all acronyms for the names of the setups, and they're memorable, obviously. DADA, IZZY, and then what was the other one I put on? Oh, the slug. So slug's actually the highest winning percentage as of right now. So we're doing we've employed these strategies the last couple months, and I'm keeping track through Apex. I have different accounts. This one's actually live, and this one's close to being live. But we're gonna have exact stats for each one of these setups for my trading room that I have, and we'll know exactly the winning percentages. So now, if this does ATR retest failure, the BARF is in play as well. BARF is blind ATR retest failure of any zone ever. So I take no other inputs into consideration when I take that trade. It's
Crude
just to
Iceberg by CL 152 contract.
just to show that these volume events are
Crude
an edge
Iceberg by CL
by themselves.
164 contracts.
And then when you add them in important areas, then it's even stronger of an edge. So here's your, and then we also have a trade for this exact scenario that's happening right now when the market move is 1 ATR, 2
Wheat
ATRs.
Iceberg sells EW 152 contracts.
Away from these zones, they have a strong tendency to, and in my experience, this is just my opinion of these, we're going to know because I actually have a program that I'm about to be working with. We're going to have all this stuff automated, running in the back end, and we're going to find out these exact winning percentages. But this reversion trade, the reversion back to this volume event is 70% or more of the time. The tricky part is how far of an ATR, how many ATRs does it move away before it comes back. But I know for a fact this, from watching about 4 million of these setups, that it does it with uncanny irregularity. Regularity. All right, so the BARF's in play now too. So you can see I put the zone prices in my spreadsheet. So this is a spreadsheet we use in my trade room. It's a godsend. A couple guys in my room have helped me put this together. I used to just have it for just the position trading size, as far as putting in the amount of your account size and what you're willing to risk. So I'm risking, you're seeing here 10%. I do not be risking 10% if you're trading real money. These are Apex accounts. One of them is real money, but I trade a little more aggressively. If you're trading your own money, you should not be risking more than 2% on any individual trade. I'm not going to go down that rabbit hole rant like I do every time, but you're trading 10% of your account, you're gonna blow out your account one of these days. It's going to happen. It's 100%. So anyway, so what I put on that trade, these initial trades, these aggressive trades, I got in short aggressively at this price. So now we're back to the zone. So if it retest fails, I'm going to put on the BARF trade as well. And these are the trading strategies that we're currently working on. There's about 50 more behind these coming up, but we're just doing a few at a time. And the whole goal is not to, a lot of people don't have the bandwidth to be doing 8 strategies at a time or whatever, but you pick 1 or 2 of them, perfect those, get really good at them, and then you can move to another one. So eventually there's going to be pages and pages full of different playbooks, right? And then you pick and choose the ones that make sense to you and or work the best. So we're going to know the exact winning percentages for all these when we get a large enough sample size. But like I tell the room, I'm willing to bet every one of them is going to be profitable because they all incorporate the BARF. The BARF is always, doesn't always have to retest, but the point is the volume event. Volume events are what drive these markets. Volume drives markets. So we are taking advantage of volume events where traders are trapped. That's the whole idea behind this. And all these setups are based on my personal experience as a large scalper back in the day. It was a long time ago, but I used to trade 1 million contracts a month, round turns, 1 million, over 1 million. I averaged 50,000 a day at the time. That's when the S&P was only trading 500,000 contracts in a day. So I have seen plenty of market action. I know how I used to react when I was loaded up, so on and so forth. Let's see if this is a setup, by the way. I have my volume turned on. No, that's not a threshold. So then each one of these markets, we have thresholds. What's a tradable event versus not, right? So a lot of people get this subchart and they just start trading spikes on any spike that occurs on the subchart. That is ill-advised. You want to wait for meaningful spikes, and this is just from experience of watching so many of these. I've come up with thresholds. This is part of my SI indicator course as well. The first one I put out, the second one's close to being completed, but the thresholds are pretty much the same, right? So NASDAQ, in the original course, I had it at 100 or 120. I have NASDAQ at 150. So I'm not drawing a zone and trading off it unless I see at least 150 stops or 150 ice. All right, well, I'm chirping. Let me get these. I never put the stops in for these orders, and hopefully I don't get stopped out, but it's trying to creep up there. And, guys, this is trading. If you get stopped out, it's a probability game. I know I have an edge. I get stopped out, I wait for the next setup, I put it on again, right? So I put this on at 29.50, I'm stopping out at 80 and a quarter. I'm risking 50 points. I don't adjust my risk based on what I want to lose. I adjust my risk. I adjust my size, not my risk. This risk is confluent with the zone and the current ATR. So if this was 150 points, I don't care, right? So say the ATR was ripping and it's 60, right? There's 143 points I'm risking. I just got to cut down my size, right? So do not try to impose your will on the market. That's the whole idea behind this spreadsheet, to help you, gauge the current volatility. And this again trade, I don't want to look at it right now, but I can just tell by this tick strike it's not.
NQ stopped by NQ. Right. 172 contracts.
So here's some new stops. So again, if I get stopped, let me get these stops in first of all, and then I can draw this new setup and trade off of this one, because there's another stop run up in this area. So I got to get this in 80.75 for each one of these setups. So just be happy I didn't hop in this webinar 2 minutes earlier. You guys all would have been, those of you that love to jump in my trades, you'd be short right now. So that's a good thing. And guys, I don't like losses. Trust me, I hate losses, but they're going to happen. You have to accept you're going to have losing trades. If you have an edge, you put on enough trades, you're going to be a winning trader, right? We talk about it every single time, liking it to a casino. This Microsoft window thing is just literally driving me crazy. Where it merges all the windows together. All right, so you can see they're buying the bejesus out of these stocks that drive the indices, that drive the futures. All right, so I just got stopped out of those first ones. So let's see. Hold on, not sure why this isn't working. All right, there we go. So it's pretty rare actually that you get multiple. I get multiple setups. Different strategies all firing off at once that it loses. I think that's the second loser out of 20 since we've been keeping track of these trades. All right, so this is the most recent setup. Let me get this off here for a second. So this is 223 stops here. I'll go over some of what I put on, and I'm going to probably put them on again here, the same exact strategies if this turns out to be as long as this doesn't get an ATR above here, then I'll short this again. If it gets an ATR above here, then that's going to turn this setup bullish, and I will trade accordingly to the upside. I don't really want to, but again, I don't try to impose my will on the market. I let it tell me what it's doing, not what I think it should be doing. All right, so just drew that current zone. That was 200 buy stops. Top of the zone was 1306. 65 quarter, so we'll put that in. The bottom of the zone was that should not be in between prices, so I did something wrong there. So I'm trying to figure out where this spike started. So I need to actually move this up here so you can see. So these sweeps started down here that triggered the stop runs, right? Because you can see the stop runs started after. Well, you don't know if these stop runs were sitting right here, right? Because whoever swept this order book, they get first right to the orders. So they get first right, and then the stops come in after that. So these stops could have technically been, well, we know they weren't right here in this price area because they would have already triggered with this price action, right? I don't know if they were sitting here or here or here before the sweep was done, the original sweeper, whoever was sweeping this thing. So I'm going to just draw the bottom of the zone right there because they could have been sitting there. They're not showing as firing off to up here. But again, whoever swept this order book gets first right to the orders. So I just have to draw my zone, assuming they started right there. Right? That's just trying to get the most accurate zones because it makes a big difference, right? I mean, you guys have seen the many times I've been ticked out in my life. About 5 million. Hold on here. All right. So that looks like the most current zone. 13.060.75. That's the bottom of the zone. ATR in here is 21.1 now. All right, so let's see. So if this market gets up to, you know, it shows you right here, ATR validation price. So if this market gets up to 86.25, then this is no longer a potential bearish setup, and I'll trade it. I'll trade this to the long side. Let's see if that happened. That's happened. So this is now a bullish setup, right? So I'm not shorting that. I was ready to short again based on my strategies. This is now the only thing this could be for me right now. And I'm pretty sure we just drew new Ludwig levels. We call them lugs in the room. There you go. There's new lugs. So this is telling me something too, right? I just got done saying, like, we had multiple setups there at short. When I took this short, we had the slug, we had Dada, which is an extreme standard deviation of VWAP. Here's VWAP. Here's one standard deviation called daily value area. Here's 1.5. Here's 2. So we had a stop run at the lug. That's a slug. We had a stop run at extreme standard deviation. That's a Dada. And then we had an IZZY, an inflection zone that this market moved up into. That's based on these bar charts, the 4 important areas of charting. We'll go over that. So this is really good information. Yeah, I took a loss, but it's great information. One, it ripped right through the zone. This is the zone this market gapped down through from the other day. It's pretty close to the high volume node of this thing, this major one, just the start of it. But I would make that high volume node all the way up to this zone, actually. But that's information that this is probably going to move higher, right? Like for it not to even barely pause in these areas, and it ripped through the slug. These Ludwig levels are absolutely ridiculously powerful, as you can see down here. The support one was overnight, or actually this was in the close yesterday. This is why I use them, because they're so ridiculous. But it gives you information. If it just plows through a lug and makes new lugs, that's telling you something, right? Especially at important areas. And we had multiple important areas here. This is actually, sorry, it looks the same on NQ, but I'm on the wrong market here.
Gold stops LGC 172 contracts.
All right, same thing, right? So this was even more of an important area than the chart I was just looking at, because it was a ES, but it was the same looking chart. So blew through that lug. This was extreme standard deviation. It was 1.5. So
Cattle stopped by LE 167 contracts.
I took all those different setups, and then what else was here that I didn't, we don't have a playbook on this yet, but we will. This thing came to the bottom of this. This is a mammoth market profile composite, so multi-day, going back like 3 weeks, all these days. I'm not going to undo these merges, but these are all single days merged together if the value areas overlap, like this one. Like I have to merge this one from yesterday. So you see 50% of this single day from yesterday overlap the day before, so I make that a composite. Well, this one is like 3 weeks of composites. That's how powerful this thing is. And you can see the other day when I broke out of here, bounced off that one, tried to get back in this one, closed right here, gap down out of it. Now right now we had all those things happening, had all these setups. Not only did it blow through all my setups, it blew back into the zone. That is telling you something, in my opinion, right? If it fails back out here, then I got to reassess. But right now, this is looking like this thing is going to rip higher. When markets accept in new market profile composites, the tendency is to get to the other side. So that's what you have to assume. My thesis right now, based on everything I just talked about, is higher for today. I don't like that. I want these markets to go to zero. I think they should be at zero. But again, I'm a day trader. I have to trade what I see. This is telling me all my losers I just took here and that break into this is telling me that's going to happen today. So we will trade accordingly. So now I'm waiting for a retest of the zone, which is pretty imminent because that's what happens here. So what can I put on here? I can put on 2 different long trades based on my strategies. The slug and there's no slug here, right? The slug is a fade trade. That's not in play. The IZZY's moved in important zones. That's a fade trade. That's not in play right now. Actually, a move back into this would be, let's see, this might be an IZZY going the other way. I could play an IZZY here on the move. This was a zone that was important, broke down, just moved through it right now. So coming back into this, I could play an IZZY going back that way. So that is an IZZY long I could take. But other than that, there's really nothing else in play except for the BARF. And a BARF is just a blind ATR retest failure, which it's about to do. And this is a strategy we have in the room right here. I can give you an example. So if my room was playing this trade, they would have been short. The 1 ATR away from the zone was an entry at 84.25, stop at 09.50. The 2 ATR would have been at 03.25. I don't think it got up to the 2. It did not. So the 1 would be in place. They would have been in an 84.25. Stop is up here, and all the trade is waiting for a retest of this zone. So it's basically like a scalp type trade, right? But it's just taking advantage of these algos that rip these markets back to the volume events, which is just uncanny. It's unbelievable. It's across every market, all day, every day. It's nuts. So that's what we try to take advantage of, right? So the BARF's always in play. That's just an ATR retest. Failure, I get long. We'll look at these prices when that happens. And then you do have liquidity up here. The risk reward for this, if I put on the lick trade, it's LICK. I'll show you that here in a second. If the liquidity was way up here, because you got to remember, if I go long this setup, I'm going long once it moves an ATR plus 15% out of this zone, and my stop's going to go an ATR plus 15% out of that zone. So if I'm taking a lick trade for only 15 points into this liquidity, which it will hit, it's about 100% that it's going to take out this liquidity, or at least fill these guys and then die. If that happens, it's not worth my risk, right? If I'm getting in here if this goes retest failure and I'm getting in at my regular spot, I'm basically going to make 15 points, risking all the way back below this zone, risking like 50. That's not a good trade, right? If there's more liquidity above here, there's a little bit, but I don't consider that heavy liquidity. So there's no lick trade in play here. The only thing I got in play here for the long side is the IZZY, and actually I should be, let's see where the zone is. IZZYs are aggressive entries most times. Let's see, this is at 65 to 60. Let's see where this inflection zone was. Yeah, I mean, it's right there. So I should be in this IZZY trade aggressively, right, on the retest when it broke out of that. Hold on. See, this is a little different situation with the IZZYs because I'm usually sitting there waiting for moves like into the zone to fade. This is like rip through the zone, and it really hasn't come back to the zone, right? So the stop run happened in here. So I'll take this IZZY, but I'm not going to take it aggressively because I really didn't come back to the zone. So if it comes back to the zone, I'll take IZZY and I'll take BARF. So if you guys are just hopping on, like, what the hell is this guy talking about? BARF, IZZY. These are the names of my trading strategies, right? I don't have the details here. The details are from my trading room. If you want the details and all these and their spreadsheet and everything else, join my trading room. This is I do this twice a day, this kind of webinar twice a day. And plus there's really capable traders in there pointing out, volume events. This is basically what it looks like. All right. And if you guys can't throw this is from last week. Throw your questions in YouTube because I can't cover all these different. But this is the trade room, right? So like people are posting charts and what they see, and it's a very good environment if you want to become a capable, profitable trader. So anyway, these are the setups, right? So I got the slug, the lick. That's just trading for liquidity, back to liquidity. IZZY, we've been talking about. The BARF is just a blind ATR, retest failure, the DADA, and then this one I haven't traded as much, and then we got a couple other ones that we're working on, but this sheet will be filled over the next year. I've got, again, 50 behind those that I will introduce one at a time. We're trying to work on these individually. Why won't this work here? Hold on. Right, so that's that. I think I missed a trade in soybeans. So let's see. So again, guys, like I have these audio. When you set up this SI indicator chart for the sub chart, you get your alerts, right? And so, for instance, you get a text alert and a voice alert if you check these boxes, right? So you can put in whatever you want it to say. It reads it off to you. So I've heard some stuff. My volume was way down, so I missed some stuff. So if you miss it, just have the text box enabled, and then you can pull up and you can see exactly what's fired off. So if you miss something, you can come over here and find it. All right, and that's just go to the main page here, the main Bookmap page, and hit alerts or file. And oh my gosh, this thing's driving me nuts. File, and then alerts, and you can get that information. Hold on one second, guys. Having trouble clearing my voice as usual. I sound like Clint Eastwood again today. Apologies. That was a pretty funny comment last week, even though I think the guy was being a smartass. Kind of true. That's what I sound like. I don't know what the deal is with Bookmap webinars when my voice starts to disappear. Probably because I've been chirping all week. But All right, so most of my stuff is black and white, right? Like as far as the thresholds and the spreadsheet and the exact prices we're getting in. There's going to be instances where you're going to get a situation like this, right? So this one, what was this? This one was 659. So my threshold for icebergs is 700, right? This one didn't quite make it. This one was pretty close, 675, right?
Crude ice iceberg by CL. 151 contracts.
I don't usually like to go under threshold, but a day like today, I could draw this zone. I will, just for the webinar as well. I'm not going to force trades for the webinar, but the point is, if I saw 600, 650, 700, 800, 900, and then I see a 675, would I draw that zone? Absolutely not. This is only the second volume event of the entire day that was even close to threshold. I'm willing to draw that zone. See what I'm saying? If you see 1,000, 1,500, you don't want to be drawing 675s. You don't want to do, even if it's 700, you want to up your threshold for the day. But in this instance, I will draw that zone, and we can trade off of it because there's just been nothing in here all morning, right? Let me get this off here. This is the new market pulse. Really, really, really interesting stuff there. That the Bookmap just keeps coming out with more and more things. I'm like a kid in a candy store that just to help develop stronger and stronger edge, right? With what I'm already doing, this stuff can all be applied. They keep coming out with new stuff. So you can see here, this iceberg, you can see it on chart here as well. You want to incorporate all the prices that happened in the spike, right? So I got that. And then use your crosshair, you can see where the spike ended. So actually that comes down here, and you can see actually this iceberg, this yellow line on here is showing me on chart. It's showing me where this was one entity that put in this iceberg. So again, this was not quite threshold, but I'm willing to draw it. It was 25 contracts away, and this is only the second even remote spike in here this morning. So I will play out of it. So let's get that. So here's your zone prices, 1050 down to 975. Pretty tight zone. Go over to our ES tab. That is 41.10.50. And then we put in the ATR. This is just if I'm just using the 5-minute ATR, Wilder's ATR 14 period. And it's the default on think or swim. You see right there, ATR in the middle of the screen there, 14 ATR 14 Wilders. It's 3.93. What is that telling you? It's just telling you that the market's rotating basically 4 points every 5 minutes. Right? Very important information. We're adjusting our entries, our stops to the current volatility, not some static stop where I say when I put on a ES trade, I only want to risk 2 points to make 4. Like that just does not make sense, right? I mean, you're not you may get away with it in an environment like this when the trade's been absolutely horrible for a month now, month plus. I mean, it's finally starting to pick up with this down move, but you may get away with it now. But when the ATR pops up to 10, 12, and you're risking 2 points on your trades, that's an exercise in futility. You're going to lose money. You're going to be stopped out because the market is just randomly rotating. The rotations are 10 points. You think 2 points, you're not going to get stopped out. You may get lucky a couple times, but overall, it's just not the right approach, in my opinion. And I think that's one of the two biggest fallacies of amateur traders is they're static stops. They're just putting in the same stop distance every time they put in a trade, and then the trailing of stops, right? Like, all right, I'm long here. Yeah, it's moving in my favor. Okay, I had my stop down here. I'm moving it to break even so I don't lose any money. Well, what do you think these algos don't know what traders do? That's why when nothing's going on, then they start to play their games, and they come down and they stop you out, and then the thing rips 40 points, and you're like, oh my God, what did I do there? Why did I move my stop? Don't base your stop based on what you want to happen in the market. Base your stop on something that happened in the market, volume events and volatility. So if I end up getting long this setup and it moves in my favor, I'm not taking my stop and moving it to break even. I'm making the market come back. They can algo it all day long, but it has to get back through the volume event, and it has to push outside of an ATR to stop me out. That's how I trade, and that's from experience of watching thousands of these setups, right? It's been trial and error. Yeah, Stock Bull, I'm seeing your comment in my trade room. I did drop below threshold. I fully explained why I did that. So, there's been no setups in here today. It was 675. It was close enough, so I drew it. All right. So this is a rare non-retest. You don't see this very often. But it will. Trust me, like I said, it's 70%. We just don't, is it going to go 2 ATRs or 3 ATRs and then come back to the zone? We try to take advantage of the 1s and the 2s in equities. But you can bet. So what's probably going to happen here is it's probably going to fill this liquidity, and then it'll come back, and then, usually that's like go time. If it can't get through this liquidity and keep going, then it's a failure, and it'll do that. That's not my thesis right now. So
Bond Ice Iceberg by ZB, 506 contracts.
Now you got bond ice coming in too. So usually when you see bonds, a bigger move is imminent. So let's go over this bigger picture stuff first on top of it. So shockingly, in a shocking development, the markets did a bungee jump when they looked like they were going to zero. They just popped right back to the volume, to the balance area that it broke down from. It does it probably about 99% of the time. So this is no surprise, right? So we talk about in my room all the time and on these webinars, when markets break down from balance so many times, they'll come back, they'll retest the bottom of the balance area and then fail. That did happen yesterday. And or the high volume.
NQ Ice Iceberg sell NQ, 152 contracts.
So we got a new setup
NQ stopped by NQ, 155 contracts.
We got new setups in NQ. I never got filled on my barf. So guys, there's going to be times where you just don't get in the trade. My rules, I could have gotten the Izzy aggressively, but my rules are wait for the retest. That didn't happen. If you have rules, you stick by them. You don't just be like, oh, this time I'm not gonna wait for retest. I'm just getting in. I demand that. Sometimes, doesn't happen very often, but when it does, you may miss the trade. And you're like sitting here, damn it, I should have put that on. Right? I mean, it is what it is. But the thing is, the beauty of this is even if you miss this trade, there's always another one right around the corner. And here we go. This is now actually a double whammy. What's a double whammy? It's one of my 6 distinct setups. I've added one since my new course. Double whammy is the dumb money puke, which is usually the retail trader. They're not the informed money, so we call them dumb money, which is us, pretty much me included, into the waiting hands of sell ice. So you can see here there's 180 plus sell ice here absorbing these orders, and you can see the sweeps on here, which are basically the stop runs into those orders. So inherently this is a bearish setup. I would say 70% of the time double whammies work in the favor of the icebergs, right? Because you got to look at it this way, just common sense. Stop runs aren't usual real buying. It's not initiative buying. It's people puking out of their positions. So does it have the energy to keep going? Usually not. That's why we play this. One of the setups is the dumb and dumber. When you see a stop run, you play the failure right after that because it's not real buying, right? It's not initiative buying. Well, not only do you not have real buying potentially, I know people can stop in entries, but it's usually most of stop runs are people just puking their positions, right? And then you got the bigger money stepping in and selling it with their hidden orders, right? That is usually a recipe for that. It's even more information if this turns out to be a bullish situation, right? That's giving you information too. It usually shouldn't, but like I told you, these markets look right now very bullish, at least on a day time frame. Overall, it still hasn't. If this gets through this high volume though that we were just talking about here, then this is going to be a failed breakdown, and these markets are going to rip off the page. Would be I'm not saying this is all going to happen today, but I would put this high volume node. This is just a general area. High volume nodes are just where the most trade occurs in a balance area. A balance area are just traders placing bets. The high volume node is the area in the middle of it where the most bets have been placed. So this is it, or basically we're right here. And now we're in an inflection zone too. So now I might be able to short this again. Izzy at least aggressively. You can see this zone. First of all, it's the high volume node of this whopper, right? This is multi-week balance area, right? Then you have independent things here too you had a selling tail and directional conviction out of here a few days ago, last week. So this is a very important zone that I will fade. And I just got done saying this looks like a bullish day based on, losing on those initial shorts, so on and so forth. It doesn't, my strategy, if I get an Izzy here and this current volume fails, I'm shorting it. I'm a day trader. I will play both ways. The way I do that, so say this comes down here and I get a bullish setup, well, I will trade the bullish setup with more size because my thesis for today, bigger, more contracts, because my thesis for today is bullish, right? I'll still take shorts, but I'm just going to take a normal. If I was bearish this market, like completely bearish right now, then I would take shorts double size. And we've done that a few times on these webinars, right? So let's stop talking and get this zone drawn, and we'll see what we're going to do here. So this was the double whammy. So you want to spread out your prices and try to incorporate all the prices that happened in the spike. Basically started there. I like to color my double whammies dark blue just so when I look back at my charts I can have an idea what transpired. Was it a stop run? Was it a sell iceberg? Was it a buy iceberg? What we're trying to do is take advantage of high volume areas. High volume is our trap traders, right? Because to move out of here, somebody's wrong and somebody's getting the hell out of the trade. That's how you have to approach it. Make it very simple. The simpler you make your trading, the better you will do. I tell you guys all the time. This is where I got all my experience being a scalper. I made millions of dollars just staring at that thing. It doesn't get much more simple than that, right? So keep your trading as simple as possible, and that's what I teach in my room, and that's what we work on. All right, let's get the zone in. Top of the zone is, once again, in between prices, so I didn't do something right there, as usual. So I did not see this spike up to there. I didn't incorporate that, so I got to get that price into the zone to make it accurate. So now we got 13,100 as the top of the zone. And then you got 89 quarter as the bottom of the zone. So we come into our handy dandy spreadsheet. I have no short-term memory anymore. When I say 89 quarter, 13. Your ATR is 19 right now. They're just buying this thing like there's no tomorrow, as usual. It's just everything's okay. There's just just another random bank fail the other day. There's nothing behind that. There's no other banks that are going to fail. That was it. I mean, it's just, this is why, guys, if you trade fundamentally, you're going to get your head ripped off a lot of times, right? Like this rally makes no sense. Not only this one, I'm saying overall. Like after the first few bank failures, whatever it was about a month ago, market rallies. It's like, okay, yeah, that makes a lot of sense, right? It's like you would think the market would be headed towards zero. And I was talking to Dr. Brett the other day, Dr. Brett Steenbarger. I would definitely follow his blog. I'll show you that right here because he's got some, he works with a lot of top hedge funds, so he can't post a lot of times. It's against the thing, but when he's not working with them intermittently, he'll post stuff. So I would definitely follow his stuff here. This is the guy that wrote the book that put me in his book. This guy sat behind me for a year.
Nat gas iceberg by NG. 155 contracts.
Yes, we'll look at that too. I think I missed a crude setup too. But anyway, he posts a lot of interesting things, right? So go in here and go to his tradersfeed.blogspot.com. So anyway, I was talking to him the other day, and we were talking about the irrationality of this up move, and he said, well, it's contained. It's because it's more the smaller regional banks and the bigger banks are in trouble. And I said, well, isn't it the adage where there's smoke, there's fire? And he said, most likely. He said, this is exactly what happened in 2008. A couple banks, smaller banks, regional banks with the mortgages started to go under. Everything was okay. The market kept rallying. And then all of a sudden it came out that everybody was having trouble. And then the market got smushed, right? So I have a feeling that's what's going to happen again. But at what point, right? So it's like you just short and just hold it. And,
Crude iceberg by CL, 151 contracts.
So like you gotta, we're day traders. So speaking of which, if I get this up here, this is an Izzy in here too. So there's stuff firing off on crude. So I Gotta get more into the trading mode here instead of storytelling. All right, so let's see the prices to make this a bullish or bearish setup. Turn off my this is my new market pulse. That's Crude. We'll head over there in a second. All right, so this market, so you see all the prices are in there. That's the beauty of the spreadsheet. You put in your zone, you put in your ATR, and it tells you exactly based on my rules that I've incorporated over the years when this is a bullish setup or bearish setup. So if this touches 13,119, it's bullish. If it touches 70 quarter, it's bearish. All right. So this is already close to becoming a bullish setup. So I will still take a long on this setup. If it touches 19, retest failure, I'll take that trade. This one didn't retest. It didn't get back all the way to the zone, which is, like I said, pretty uncommon. But this one probably will. So give this a second. They just keep buying these stocks. Let's take a look at the internals, by the way, too. This is really important. You need to be looking at this every day. So this is interesting. You see the internals here. They're going the other way, right? So this is the overall stock market. This is basically the stocks that drive the indices. So you got a little bit of a divergence here. Not a little bit. It looks like a pretty decent divergence. So this market has gone from a 14. This is just ADD, advanced decline, for the universe of stocks, right? So this is moving this way. This is moving this way. Well, something's going to give, right? And most likely it's the overall market's going to win out. There's a lot more stocks. Yeah, these are the highest weighted stocks. But if this thing keeps moving down, you can bet this is coming back down with it, right? So just information. Doesn't mean I'm just jumping in a short right here, but you keep that in mind, right? And then you're looking at, is this updating? I don't think this is updating. Hold on. This is not. Yeah, no, that's right. Okay, so this is very. I literally thought this was wrong, because when you see ridiculous, like when you see this going on, where there's just no tomorrow buying. Hey, look at this tick. This is really, really interesting. So read Dr. Brett's stuff. He talks about this stuff too. This is what he just posted recently. I have no idea what's going on here. Like, you never see this, right? Usually you see during that kind of up move that we're seeing, you're seeing the tick up here near 1,000. This is warning, Will Robinson as well, for you older peeps on here. If you tell me the show. It's not even a movie, it's a TV show. Somebody know this, throw it in the chat. You get an A+ for the day if you do that. Anyway, this is, something's going on here. This thing's hitting under negative 500 tick, and this is going straight up, and this is going down. Like, what? This is very odd behavior. And we're at an area where these markets, at least NASDAQ, could easily fail. This is the high volume node, so this could fail. So this is just information. It doesn't mean I just start shorting stuff. I keep that in mind. Unfortunately, this volume setup, I think this touched the ATR to the tick. I'm hoping it didn't, because I want this to be a bearish setup, because I want to short it. I always want to short, but especially after what we just looked at. So we need to see 19 for this to be an official bullish setup. Did I get to 19? It did not. So this potentially could still be an easy trade to the short side, as long as it doesn't get to 19. So now we wait, right? So if this does get up to 19, retest fail, I'll go long based on the BARF setup. It's just a blind. I don't care what else is going on. I don't have the descriptions on this thing, but in the descriptions that I give my room, it doesn't say blind ATR retest fail unless the tick is going opposite and the ADD is going. It doesn't say any of that. It's just I'm taking this trade no matter what, and it's to prove the edge of the volume events, right? To show what kind of edge these volume events are inherently, without another thing inputted, right? So technically, this is still. We don't know what this is until it touches 19 or 70 quarter below there. I think the price was. So we're just in wait and see mode there. Let's see what's going on in ES. So it's not retested this setup. So we're not seeing anything threshold yet. This was the most ice that's occurred. It still hasn't retested failed, because the only thing in play here is the BARF trade. Meaning I'm just looking for an ATR, which that got a retest and a failure, then I would take a long. But I'm still waiting for that to occur too. So let's just put that in wait mode. Let's go to another market. This is exactly why you guys want to be watching other markets, because when those markets suck and they're doing nothing, you can hop over to another volume event. So I'm watching like 17 different markets. Very easy, especially on one screen when I'm doing webinars, being sarcastic. So you can see there's something in crude, there's something in natural gas, there's those NQ stops, bonds. I got to draw all this stuff. All right, let's start with crude. This is actually the same area there was ice earlier this morning, and you can see it came down here again. Here's another 412. So do you guys think that's important information? Do you think there's important information instead of staring at a bar chart when there was, where was it? This came down a little lower. I didn't get a chance to draw these as it's moved down lower here, but you can see this was the first spike that I drew right here. This was 250. Moved down, buy ice, buy ice, buy ice. Market reacted, came back, retested that zone, reacted, shocking. Now here's more buy ice. That's kind of important information that you need to know, right? That's the beauty, that's the edge, that's why I say this is the greatest edge I've ever seen in futures trading, right? To have this kind of information. You're seeing what the big money is doing. They're the entities that run the show, right? It's not because they're smarter, it's because they're bigger and they can do whatever they want to do. You can see this zone is almost exactly where this last ice came in. Let's make sure that's right. So I'm going to bring this up a little bit. We'll trade off this most recent zone here. All right, so that is there, 74.50 down to 74.40, so it's a 10-tick zone. We'll look at the bigger picture stuff here in a second. Let's get the spreadsheet. I'll try to answer some questions while we wait for something to happen in these equity markets. 74.40. ATR is 0.24. All right, let's see where we are in the bigger picture. Pretty much in the middle of nowhere here as far as ISI zones. There's no important inflection zone here. Not quite there. Quite there. So this was an important zone. This is a really important zone, and it actually just touched there. There was I think I missed a trade here. I'm almost positive I missed a trade here. I would have loved to short right there because this is where this thing gapped up. About $5. That's pretty important. And what did it do yesterday? It melted right through that zone. So when it melts right through a zone, usually first retest, then it fails. So I'm pretty positive because I know I heard something. I just didn't get over there because I was staring at the crappy NASDAQ. Let's see. Let's see. That was threshold. That was not. I would have incorporated. You had a lot of stuff here. That's not. That's not. Another. So a lot of buy ice in here today. Actually, I was experimenting with a different mode. Let's put this back in reset mode. I had a meeting with the Bookmap developers about how this thing's drawing these zones, but as of right now, we're just going to keep it on reset. I used to have it on sliding. I used to have it on exponential originally, then I moved to sliding, and then they had a bug in that, then I moved to reset. I've been using that ever since, but there could be issues with this. Not issues, but the way it's reading it. I have a meeting with them hopefully today, but right now, continue to use reset mode. Stay tuned. I'll keep you guys updated on that. So, anyway, I was thinking there was a stop run up here. There was not, so I didn't really miss anything up there, it looks like. So, as far as this particular setup, the BARF's always in play. It's any volume event, blind ATR retest failure. It's the most active trading strategy, obviously. If this market gets up to 78, this is a bullish setup. I wonder if that touched 78 exactly. Let's see. Nope, 3 ticks away, so that we don't know what this is yet. So I don't know what this. If it touches 78, retest failure, I'll take it along there, but we're in wait mode there. See what happened to natural gas. I've been talking about this market for weeks. I think this thing's going to just rip off the page. This is just, so this actually is a potential ISI. You can see this market moved out of here yesterday, just came back in here. I heard a volume event. This is a trade where I can take aggressively. This market tried to break down, failed breakdown, ripped up, came back. What did it hold? High volume node, like we've been talking about. Then it built more balance, broke out, What did it do? Came back, just retested the top of this balance. Now this looks like it's coming up to these zones. Not necessarily today, but overall, my opinion, obviously. But this is an important inflection zone, aka Izzy. And I heard a volume event, so let's see. And Izzy's are aggressive entries, so I should already be long this, it looks like. As you can see here, this is 196. So let's draw this volume event. I don't know. Yeah, that was about it there. So that started here, and this is 50. I'm gonna draw basically where this started, where this is where this one. Yeah, see how it stopped and started coming back in, so that popped up to there. And out of there. And my new course will go over, drawing these zones in detail. I go over it pretty well in these webinars, but again, you guys got to remember I'm trading live, so I don't have time to go over every basic thing on here. It's just not possible. I miss so many trades and make so many mistakes as it is being on one screen. You can ask my room. I've missed hundreds of points of trades just this week in NASDAQ alone. It's very upsetting. All right, so this new zone here is 2.293 down to 2.288. So we go to our incredible, life-changing spreadsheet. 2.293, 2.288. Oops. ATR in here is 0.1015, so it's basically 15 ticks. Rotating 15 ticks every 5 minutes. Right. So if I'm going long aggressively on that Izzy, I'm long at 23.10. I can put on, based on my risk and the amount I'm risking here, I can put on 1.28 contracts. Well, obviously I can't put on 0.2 of contract. This contract does not have a micro. I don't know why. They do have it's called QG. It trades in quarter. So I could put on 6 QGs, which I will do aggressively. I can still get in here at 10. That's pretty much where it traded. So now I would already be long, so I'm going to put that in right now. Let that work. I'm not going to get in right here. I'm going to make it come back. Some people ask me, why don't you just get in if you're getting a better price if you had already been filled? Well, I'm just like, well, because this thing may come all the way back now, I'm going to make it go all the way back up there, then I'll go long. All right. Of course, this is wrong with this as usual. A lot of guys are trying to set up this rhythmic front end. Trading front end. Just not understanding why it doesn't save the month. They still have me on April, and I've changed it 10 times. UG. Alright. So this is actually the live Apex account. We'll go over Apex here if we get a little bit of time. You guys are, if you're newer to trading, you're struggling, or you just don't want to risk your own money, you do Apex, and if you do well, you get funded, and they don't, it's not a bunch of nonsense. Oh, you got to do triple Lindy, you got to do 4 more qualifiers, and do it in a live environment, and blah blah blah. It's the best one I've seen, so that's why I use it. That's why I put my name behind it. Here is a retest of that zone in Crude. So now if this launches back out of here, I can go long the BARF setup. So let's put that in. Remember, there's a bunch of buy ice down here too. I'm not necessarily bullish this market, but I'm a day trader and my strategy says to go long. So I'm going long. Sure, this is right still. It's 0.235. So I can go long at 74.77 and I can put on 8 contracts. And this is the BARF. So I will put that in. And I have an energy BARF, so I have BARFs for each, as you can see here. BARFs for each equities, energy, metal, just to keep it straight. Because the problem was, and I'm doing it for accurate stats as well, I would have multiple positions on, and a couple of them would draw down, and I would I pull back on the. We'll go over the apex thing if we get a chance, but if you pull back a certain amount, then you can blow out of the thing. Well, I would have winning trades on in some products, and then I would blow out of the count, so they'd liquidate everything, so it wasn't giving me accurate stats. So I'm thinking doing it this way is going to be more accurate for our statistical reporting. So I got barfs for each one of those products. All right, let's see what's going on here. Do we get the retest here? So if you lost on that first ATR, the one ATR reversion trade, this one worked. This is why you take them all. You don't say, oh man, these things don't work. You just keep putting them on. There you go. So now if this does this, I'll go long, but this might go this, and then that, based on what we just saw with this internal stuff. Is that trade in play in here for me? Actually, yeah, this did not get an ATR above there yet, right? So a short on this volume setup is potential still, I think, because we didn't get to 19, right? That's how I determine. If this got to 19, I would not take a short. This did not get to 19. This got to 1850. Real close. That did not, so I can officially still take a short on this volume setup. So let's see what happens here. You did get a retest of the zone in ES, and it went right through it. So now these markets are starting to respond to the overall market, right? That's number one. Number two, this thing just, again, this wasn't threshold. It was close. We drew the zone. I was going to trade it. But this is exactly why I wait for ATR retest failure to take my long. I don't take a long back in the zone. I've learned that the hard way. I used to do that. I'm like, oh, well, it showed an ATR. I'm going to get in right here. I don't want to have to risk another 4 points to put in that trade. And then I get in right here, and then it would do that. So that's why I demand that. So this trade, potential barf, is off the table. Why? Because this got an ATR below this zone. So this volume event is done. It got above, an ATR above, so the short's disqualified. It got an ATR below, so the long's disqualified. So I'm done with that, and I wait for a new setup. You know, this was not threshold. This was even less than the other one, so there's just no volume events in here today yet. So, but the disqualifier for that, and you can even see here, if I wanted to take that long, it shows right here, long invalidation price. If I touch 575, I can't take a long off that setup. Let me guess, it's right to the exact tick. Wow, look at that, the exact tick. It's almost like we know what these algos are doing. So there's nothing brewing in there. I could still potentially take a short off of this setup in NASDAQ, but we need to see a move down here. Listen, wait, this was an Izzy, wasn't it? Hold on. Yeah, this is an Izzy. So I'll take this short aggressively for the Izzy setup. Izzy's are aggressive entries that touch that zone. Izzy's are fade trades. It never got an ATR above that zone. I could still put on this short, so that's exactly what I'm going to do. And based on how I had those losers earlier on the shorts, I was saying, yeah, this thing looks long. It looks like a long day today, but we're at that very important area, the high volume node, and we're looking at the internals, and something's up, right? So this is not behaving like a market that's going to rip off the page. This thing can't get back above the zero line. NASDAQ tick can't really get above the zero line. The ADD is going the other way. Then see how this is finally responding? This takes precedence because this is the overall market, right? Yeah, this is what drives the futures, but this is going to catch up because it's going to be real hard for this thing to stay at its highs while this thing nosedives. And that's what we see happening. So you're armed with that information, and then you get a bearish setup. You can trade bigger if you want. I'm not going to in this setup particular, but if I keep getting bearish setups, I'm going to trade bigger if it keeps moving lower. So this one is still in play for a short, and I'm going to go short aggressively, meaning the second it breaks an ATR out of here, ATR and 15% is our rule. That's the new ATR. So the minute this thing touches 68 quarter, I'm short, and I can put on 5 MNQ, and this is the Izzy trade. So that's this trade here, inflection zone trade, and you get an aggressive. This is the one that's live actually as well. So hold on a second. That's 3 there. That price is, what did I say, 68 quarter. All right, so that's working. So that's in play. I'll try to answer some questions here in a second, because this never got the ATR above. Came close, didn't do it. Right? If this comes out of here and hits the ATR above, then I'm going to cancel that short. Other than that, I'm shorting this zone aggressively. I did fill in this natural gas trade. This was the aggressive trade out of here, right? Never retest the zone, but we just talked about this trade. So I got in at 10, I think it was, and then now it shows you where the stop goes. I got in at 2.310. I'm just talking the last two digits. My stop's at 71. Let me put that in before I forget. Which happens nonstop. All right, 70, what did I say, 71? All right, so that's working. So long natural gas. First trade of the webinar. Like I said, you guys are lucky you didn't see these first couple trades. These were losers. But guys, again, this is what we talk about every webinar. I talk about it every day in my trade room. You have to develop a mindset. This is directly from trading in the zone. Consistent winner. You objectively identify your edges, and you put them on without reservation or hesitation. So that's, I'm taking my playbooks and I just keep putting them on. I know there's an edge because I've watched it for years and years and years, right? And we're going to have the exact stats for you guys too. So you know these truths. Anything can happen. I can have the best trade on and you can get a Fed tape on. We saw that about a month ago in here. I had double size on, and then Bullard came out and said something. The market ripped 50 points. You don't need to know what's going to happen next to make money. You're not going to know what's going to happen next. You just put on the trade. There's a random distribution between wins and losses. So I just took that loss. There's a distribution. I know there's going to be losses in my trading. And it's just like a casino. They don't know which dude's going to walk in and smoke him for $1 million and be hot that day. They know over a year they're going to make money because they have the math, aka edge, in their favor. So they don't just shut down the casino when one guy comes in and wins $1 million. They say, please keep playing to the dude. That's why do you think they give comps to the big players? Because they want them to come back, because they know math will catch up with the dude, right? And they just say, keep playing, everybody, because we know we're going to take your money. It's the same thing with this. It's just keep playing. You know you will make money if you have it may not be my edge. If you have an edge that works, you got to keep taking it. If you know it's a discernible edge, it actually works, you keep taking it. You're going to take a loss. Then you have winner, 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 winner. Actually, I'm going the wrong way, right? You're going to have winner, winner, loss, 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 winner, 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 loss, winner, 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 loss, 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 loss. This is what a P&L, a profitable P&L, profitable trader's P&L looks like. It's not that. If you think it's that, you're out of your mind. And if you think you're going to make, I want to make $500 a day, like it's a regular job and you get paid $500 a day, that's not going to happen. You can average $500 a day, but you're going to have losing days and losing trades, right? So if you can understand this, it just clears up your mind from thinking you got to make money in every trade and doing stupid crap and freaking out, trailing your stops, so on and so forth. All right, I got to take a breath and I'll answer some questions here. Start from the beginning. Lost in space. Good job, TPE. That was a while ago. A lot of chatter today in here. Let's see. Is this for AI viewers? No idea what that means. You found a trade copier that allows you to trade multiple Apex accounts for the Bookmap chart. A Ninja Trader does something. I don't know if it's from the Bookmap. There's guys in my room that are doing like 20 accounts. I don't know. I don't have that personally right now because I'm using Thinkorswim. I haven't switched over to Ninja Trader yet because I'm not ready to learn anything new right now. I got too much crap going on. H for Ninja Trader is deep. Well, that's good to know. I like input like that. My Bookmap is connected. Okay, this is just all technical stuff. You guys got technical questions, just send it to support at Bookmap. Do you primarily trade ES and NQ? I trade. I personally trade. I'm watching 17 markets, so you can see all these other markets. I mean, my main ones are ES, NQ, Russell, so RTY, crude, gold, natural gas, soybeans, wheat. Those are like my main ones, but I watch all of these, right? And what I also do for the room, I think this is worth the $3 a day that my room costs, by the way. That's just so ridiculous that, I mean, when I say it that way, I'm like, the information these guys are getting for that. Anyway, every day I will post these inflection zones, right? As you can see, I've been posting them for months, right? So this in itself, I even had a member tell me the other day, like, wow, that alone is worth like 10 times your room price. And I agree, because these zones are ridiculous, right? So you go in here, and then you could draw these yourself if you understand charting, but you want to save time, then you got them here. You just come in here and you can just mark your prices. So guys literally put these prices, and they have like an automation thing too, some of the guys, that just draws these zones in Bookmap. But you can come in here and get your prices and draw your zones and be ready to fire, right? So I don't know why I got on that rant. Oh, but anyway, yeah. So I have the zones for 17 markets. I won't trade like I haven't been. I want to trade it more because it's all the same stuff. Like today, right? Here's some examples. I haven't even looked at these markets, but look at this cattle. Big cattle trader, right? But I'll bet you we'll look at this and let's just take a quick look. If you haven't even looked at it, I'll bet you it followed the rules of it, and I'll bet you it was a winning trade. Here we go. Let's see. What was this? This looks like a double whammy. What's a double whammy? Dumb money puke into the waiting hands of sell money. Sell ice. Hidden orders. Right? So it's failing right now. So what did I just get done saying a bit ago? Like from my research, this is usually going to be a bearish setup, right? Because it's not real buying, and somebody, the big money, is selling it. Here, I don't know. I'm not going to put the zone in and do all this right now, but this looked like an ATR. Here's your retest. Here's your failure. Just like I said, I guarantee you this setup is working, because every one I miss works. But the point of this is, doesn't matter what futures market you're trading, guys. It is volume. These are caught traders. It reacts the same way. Traders react the same way. These algos react the same way. It's just what it is. This should give you comfort and be like, hey, I can trade any market I want. Like I want to get long. I wanted to get long point beans here. I may do that still because it's back here in this zone. And this was an Izzy zone. I'll just show you quickly in beans. I'll come back here if we got a chance. Just not like lots going on here. This is a really important zone. Inflection zone. You can see what's happened here, right? This is why these zones are on the chart. Directional conviction. Buying tail. Moved out of here. Directional conviction. Directional conviction. Here we are again. A very good chance it does that. You get a volume event, you take it aggressively out of there. Why do I take it aggressively on Izzy's? They're called Izzy's. Because there's a chance, this one did retest, but there's a chance, because those zones are so powerful, that you get the volume event and the thing just rips and never comes back. We've seen it a couple times this week already, right? But this one did come back, so I can actually put on this trade. So I'm going to do that right now since nothing's going on. I didn't even put the zone in because I had so much going on. I don't think I did. 650 to 475 right before the webinar. So we just go to your ZS test, so you see every product's on here as well. Right? This spreadsheet is magical. It's like a godsend, literally. I used to do all this by eyeballing in hand. If you've watched my prior webinars, you've seen it. Now, that's not right. I just enter the prices. It tells me exactly where to enter, exactly where to get out. That's 1650. That's wrong. I'll answer some more questions. I want to trade this trade because it's in such an important zone. 1404.75. ATR in here is, once again, you can see while there's ATR, 2.18. Means it's rotating about 2.25 points every 5 minutes. Very important information. So if I was going to go long, Izzy.
Crude Iceberg by CL. 151 contracts.
We got icebergs and crude too. So I'm going to trade Izzy. I should have already been long this at 09. Stop out at a quarter. So, and I could trade. I'll round up. I'll trade 2. There's no there is a micro in grains, but it's like very thinly traded, and you get horrible slippage. All right. So what can I trade here? I could definitely trade Izzy. I should have already been in Izzy at 09, and it just came back so far. I got Barf in play now here too. If this is definitely ATR. It's like a 3 ATR. Came back, retest failure. I'll go long Barf. Is there any liquidity up here? No, liquidity's below, so I'm not going to put on a lick trade. Just because there's liquidity below doesn't mean I won't put on a long. It doesn't mean it's going to this liquidity right now. But if this market were to come up here, for instance, right, and then I get a bearish setup, well, I could trade the liquidity trade to this liquidity, right? Hold on. See, now I'm chirping and missing the entry price as usual. Hold on. So I got to put on Izzy. This is actually, yeah, Izzy. I got filled on that, and then I'm going to put on barf. Grain barf. What's grain barf? Forgot the number. 57. We'll go over Apex here too. Again, I go over it every webinar, but all right, filled on that one as well. So now I'm filled on long beans. I got, you know, maybe I got lucky it came back, maybe I didn't, but either way I would have been long one of the setups already. My stop's at 2/4. We didn't even look at the lugs. I'll look at the lugs here too. Ludwig levels. The second most powerful thing I've ever seen in my trading career. We'll go over how to get all this stuff here too in a second. Like nothing's going on all of a sudden as usual. Every time I do these webinars, the markets just stop trading for some reason. All right, that's working. Long. Let's take one quick look at the lugs here. So nothing really doing there. So like right here, you see I'm going to merge these 2 days. I just haven't had a chance to do it yet. This is a market profile composite now. This day completely overlapped that day. That's an important area, especially if you're getting, like I'm long here. If that moves up to that area and starts to falter, I'll get out of some. Whoops, didn't want to do that. Wanted to go the other way. Merge with prior profile. This is all on Sierra chart. The other places have obviously have the market profile stuff. I just use Sierra chart. That's up at 16. So if that moves to 16, and it's pretty confluent, pretty close to the yellow lug as well, I'll be getting out of at least half of these. And it's extreme standard deviation of VWAP too. So you got all that, confluent with that. I will get out of, I only have 2 on, I'll get out of 1 up there if it struggles. If it rips right into there, then I'll hold it. So that's, I'm long that, and I'm long, we didn't even look at natural gas where it was. Yeah, so I'm long beans and natural gas so far. So this is interesting too, right? Like I'm long, I don't like seeing this, but I'd still put on, this is not end all be all, guys. Somebody's selling this aggressively. But guess what? If we saw this the other day, I think it was Crude. This market keeps moving up. They're selling aggressively means they're hitting bids more than they're taking offers. But that just means that the bids, someone's being they're absorbing this action because the market's not really moving down. So if this moves a little higher, well, guess what? The minute you're a seller, the minute you sell, you're what? You're a buyer, right? So you need to buy to get out. So if these guys are being this aggressive and this market can't move lower, and this starts moving higher, you're going to start seeing puking, right? Because they got to get the hell out of their trade. So this is not an all be all. Yeah, it's important information. Like if you go, we have a trade based on this. It's called the DADA. It's extreme standard deviation of VWAP when you see a diverging delta, right? Yeah, that's important. The market very likely is, you know, if there's no real buyers and then you have the algos that snap it back to VWAP and then you have sellers, that's important. But like right here is not a place, I can't tell you when I first learned this how much money I lost, because the first couple times I'm like, wow, that's awesome. Yeah. Oh, this is just sitting there. I'm going to sell this because they're selling, right? And then it would work. And then I learned the hard way that the market could just keep going and they could keep selling and it'll keep going. So yes, this is important information, but in the right areas, right? It's just not random. Oh, wow, they're selling. I want to go short, right? So I'm long because the setup told me to get long. And that's this. So this probably will retest because, and it's not going to freak me out. So did you see it? So I had a small profit on this. I had like a 10 tick profit. Did I say, okay, here's my stop? It's down to 71. And I'm like, okay, I'm bringing that to break even now. I just make sure I just at least scratch. Why? Well, what does this area have to do with anything except that you just don't want to give back? You don't want to have a losing trade after it moved a little bit in your favor. It means nothing to the market. And you can see the algos in here. It looks like a Christmas tree. it is very, very likely. I already know it's likely to come back to the zone. It's 70% or more, in my opinion, to come back to the zone from watching so many of these. So am I going to put my stop at break even, knowing that this is probably going to happen for 2 hours before it launches, if it launches? So I keep my stop. I force this market, force these algos. Okay, algos, you think you're tough guys? Then go ahead, push it all the way down, push it down through this volume event, and push it an ATR out of there. And then I'll say uncle, and I'm out, and I'm on to my next trade. See what I'm saying? Stop trailing your stops to break even. It's just nonsensical. It really is. You're just asking to be stopped out. It just does not make sense. If you really sit down and think about it, you'll realize that. All right, that's enough of that rant. All right, so long beans, long natural gas. Let me see if I can get some. There's just nothing going on now in equities, and there's a lot of breath holding, in my opinion. Remember, if this touches 19, that short's disqualified. So the short's still working in here, but let me just before I go to Crude, because I need to stop talking for a minute. Let me see if there's any other questions here. That's not what I want. I lost my YouTube page. All right, let's see what you guys got. You guys are just talking about Ninja, I think. When you use Bookmap, blah, blah, blah. Lost in Space, good job, Ryan. TPE, good job. Someone pull Bruce to see if he can join this topic. I don't know if he's listening or not. He's usually not. That's why I'm doing these on my own now, because he's got about 85 million things he's doing. All right, you guys are still just talking about the trade copy here. How does he calculate his ATR level on the chart? It's a 5-minute. This is just Thinkorswim default. If you don't have Thinkorswim, you can get it. You can throw in. I don't even know the minimum. I think it's maybe $100, $500. You put that in. You can pull back out, and you still have access to the charting. If you want to set it up on your software platform, it's a 14-period ATR Wilders. Just Google ATR Wilders ATR, and I'll tell you all about it. So I'm just using the default there on a 5-minute basis. How do you trade each setup or trade signal for a different Apex account? Do you log out of Bookmap and log in? No. So I have independent. So here, I'll just show you here. So I'm not showing the actual clicking of trades just because it's good for I can't think of the word. Liability stuff. Like, there's no reason you don't have Bookmap doesn't want to do it. I'm not doing it in my room anymore. I talk about where I'm getting in, but I'm not clicking on trades. But you can see here I'm using, because the whole idea, guys, is to learn how to do this yourself. It's not to. So this is the one. I have 2 on the other one. This is the live one. I have this one on too. No, 58. Where's it at? I know I put this on. Did I put it on the wrong account? Hold on here. I'm glad I looked over here. I just put this on 2 different accounts. Okay, I literally physically watched this trade fill on it. There it is. I'm like, what the hell? Did I put it on the right one though? This is 57. I do this all the time too. This is just, I make so many mistakes, guys. It's just makes me sad. That's right, 57. I could have swore that was not just there. So anyway, I'm using the rhythmic. So when you sign up for Apex, let's just go over this real quick while nothing happens. Go to here, right? They have sales all the time. I know it's kind of funny, but whatever. It's 90% off right now. So they send out emails. They have codes. You can still use my code. So my code is Scott or what is it? No, I forgot. Hold on. I think it's Pulcini 50. Hold on. Let's do it on this web browser instead. I'll tell you exactly what it is. I should know my own code. But you get the 90% off. Just use my code and you get it, right? So it's the same thing. So no matter what sale they have, there you go. It should be on here. So if you want to do these different accounts, sizes, right? Like I have some 150s, you can do the 50, right? So right now, if you did the 50, you come down here and you put in the code. again, they explain to me why they have this. It's ridiculous because people like forget to put in the code. Right there it is. Pulcini 50. Use that code. If you click this, then you're saying, you know, because the reason is
Crude
people will
stocks,
sign up and
stocks
they're like, oh, I
LCL,
forgot to put in my code.
170 contracts.
What was that?
Crude Iceberg by CL, 151
Go there in a
contracts.
second. But anyway, if you do it right now, you can get the $50,000 account for $18. It's like, guys, it's a no-brainer. If you're working on your trading, or even if you're not, like, do some of these. You're not risking your own money. If you qualify, yeah, they say it's a $50,000 account. It's not a $50,000 account. It's a $2,500 account, because if you lose $2,500, you blow out. Even when you go live, like the live one I have on, that I have the one soybean on, if I drop back down $2,500, I'm out of the account. Well, that's not 50,000 in my opinion, right? It's a percentage of 50,000. So it's a 20. Who cares? The point is, for $18, you can get in here. You have some skin in the game, so it feels real, right?
NQ stocks stopped by NQ, 185 contracts.
So action and NQ, I'll get there in a second. And you qualify, then you're funded, and you don't have to risk your own money. And then you can get multiple of these. And so bottom line is, once you get set up, you can trade through different platforms. You could trade through Bookmap. I don't recommend it. I do it just straight through the Rhythmic front end. So that's what this is. So each account, you can see here, here's all the accounts. Here's the live one. This one's close to being live. No, this one's slug. We'll just look at these. Hold on, let me. So that's what I'm doing here, right? So each account, each strategy has its own Apex account. And this helps me, keeps everything separated. So what I've done for years is just show you guys. I'll get on and I'll be like, well, here's this, and there's this, and there's this, and there's this. There's nothing. It's not like structured. So now we have it structured, like what's what. Speaking of structure, so now I was going to short that aggressively. That didn't happen. Actually, no, that never got an. I should have the bar flung on, but that never got the ATR above. So now it finally got an ATR above the zone, but now we have a new stop run. So I'm going to draw this zone and trade off of this one. You can see they're going crazy. This is just a really odd day as far as what's going on here. I can tell you that. Something's going to give. So this is just hysterical, right? So this thing was ripping. This was really doing nothing. This was ripping. This is synthetic of the FANG stocks. This one takes a little blip up, and the market just so. It is what it is, guys. Like, you know, if you're like playing these divergences, you're like, well, I'm shorting this thing because this is dying. Well, guess what? It's just not working right now. And look what just happened. Now the ticks finally, this is the high, oh, that's fun. This is the highest tick reading of the day, pretty much. Pretty close, right? Definitely for NASDAQ. So, you know, today looks like FANGs are going to win out. I don't really care. I try to come up with ideas with
S&P stocks stopped by ES. 533 contracts.
Threshold. But I trade this based on my rules and my setups. I don't care, you know, I'll keep an eye on it. You know, if ADD is like minus 2,000 or plus 2,000, you don't want to be fading. A lot of times, like taking opposite trades. But other than that, that's great. It's information. I pay attention, but I still will trade these setups the same way. What am I missing here? This is way down here, huh? All right, these markets are just ripping off the page. Everything's okay. Everything's all right in the world, guys. Don't worry about it. You know, just bank failures and, you know, inflation through the roof, and gas here in Arizona is $5 something. It's more than LA. Everything's fine though. Don't worry about it. Let's just keep buying it. That's what I'm talking about. It doesn't matter. It doesn't matter what I think should happen. It matters what the market thinks should happen, and I'm trading in accordance. It makes me mad. That's why I always want this thing to go to zero, but it is what it is. I love shorts. I love the other day being short. I love when the market gets killed. But it is what it is. All right, there's your new zone. This is definitely an ATR above there immediately, maybe more. 13,124 down to 13,118. I'll get to some more of your questions here too in a second. Natural gas is starting to, at least it's ripping. So there's a perfect example, guys. Quickly. I got in at 10, right? Last two digits. Oh, that's in my favor. I'm going to move my stop. I just want to break even now. I just want to make sure that happens. Yeah, you're stopped out, and then you watch this thing move 300 ticks, and you want to jump out your window. Please stop doing that. If you do learn anything from these webinars, It's pretty basic, but just please stop doing that. It makes no sense. You're just giving your money away. I like it in every webinar. I say, do you open your window and let people just come in and put their hand in the window and take your wallet off your desk? Well, you're doing the same thing when you move your stop to break even for no reason. If there's a reason, fine. In the market, if there's a reason, fine. But overall, it's nonsensical. Please stop doing that. All right, so let's see this is definitely ATR plus above here. So to make this a bullish setup, I needed to touch 42.25. Just above 42.25. So if you're in my room and you're playing the reversion trade, they're all in. They're taking the one ATR reversion trade. They're in at 40.50, risking a 62.50. So all that trade is, again, I keep talking about it, but I don't do these trades in these webinars. I can't keep up with them. I don't even do them on my live webinars in my room. What did I just get filled on? Did I leave an order in the order book? What did I just get filled on? Hold on. That would be a rare occurrence. I left something in the order book. Oh, crap. I just bought. I had something working in. Hold on. I think I got long crude. And I didn't want to be long crude because it definitely got below that zone. Goodness gracious. Hold on, guys. This is one of the reasons I'm doing the Apex, right? So if I set up all my individual accounts with my own funds, I make so many mistakes. I cannot risk my life on making mistakes. So it's like, yeah, it sucks if I have Apex accounts, but I'm not blowing out my life on mistakes. Like I got lucky there. I didn't, So what just happened there is, remember we were going to trade this setup down a little bit ago. Well, this disqualified this long. And other stuff even happened down here, and I just missed that trade. But I got filled playing that potential barf. I forgot to delete my order, and it just filled me, right? I can't tell you how much money I've lost on mistakes. So that's another reason I'm doing the Apex. One, to keep track of all these accounts. I'm not putting my own money in each one of them because I make too many mistakes. And if I get funded, fine. Yeah, it's still my own money, but it's like if I blow those out, I'm not despondent. Like I tell my wife we've got to move to a cardboard box. See what I'm saying? So that's another reason I'm using Apex. You guys, like I told you, I tried them out secretly. I didn't tell anyone in my room. This was last February or March. Tried them out secretly in my room. The Apex. Qualified. I should qualify, right? If I'm a profitable trader, I should qualify. Qualified. Got fun. Actually, a couple times I qualified. And, well, a couple times on the tryout, that's another thing you got to be aware of on here is the trailing threshold. Just quickly, I like to just go over this because there's always questions. Guys, go to I keep saying guys, sorry. I always do that. Go to my YouTube page or my Twitter page. I did a webinar with the Apex guys. So go to my Twitter, Scott Pulcini Trader. And I keep forgetting to put my information in here like Bruce used to every webinar. So we'll just go over this quickly. Go to my homepage. Right here, it's pinned. We go over all the rules, the trailing stops. This was last June, right? Still using them. They're legit. I wouldn't be putting my name on them if they were a scam or if they just wanted to take traders' money, putting in the, for the funding like other places do. Not going to name names, but they do. So anyway, that's that. So let me just go over this quickly because I forget to put it in every webinar. Here's my website. Everything you see I'm using on here is all discounted on my website. Bookmap, discount. Apex, discount. Use Pulcini 50. Spot Gamma, no discount, but you get an extra week if you use the Hero. Didn't mean to do that. Tick Strike, discount. Trader Sync, you need to be using this. Absolutely. This is the best one I've seen. You can use other ones. It's the best one I've seen. Discount. My trade room, right here. Here's all the different plans. You get discounts off of my courses, depending on the monthly, quarterly, yearly. Here's my store. Here's my course. Here's my old course. It's still relevant. I'm coming up with a new one. If you're a member of my trade room, active member of my trade room, when I release the new one, if you buy the old one, you want to get fast tracked. When I release the new one, you get this one. You get the new one for free. I'm not going to charge you twice. If you're not a member of my trade room, at the time I release it, don't think you're going to join my trade room and then say, hey, can I have the course? You need to be an active member. That's the way it's going to go, right? And I think that's because this new course is going to have way more in it, way more detailed. So that's what I'm doing. I think that's very generous. What else was I going to show you guys? I was going to show you something else, but anyway, that's that. And I forgot what I was getting at with the Apex too, so it'll probably come to me. All right, so if this retest fails, I'll go long NASDAQ, waiting for that. Beans are working, natural gas is working, long both of these. We're at the time limit here too. So I will answer a couple more questions and then I gotta go because you got the other Bookmap guy, Tom B or whatever, coming on. Whatever his last name, I don't know his last name, Tom B, I think it is. All right. Do I prefer Tick Strike instead of Bookmap Market Pulse? The way Market Pulse is right now, and they're working on Market Pulse and they're working with me directly on making this better. And they have a new version. I just gave it to my room actually. So if you come to my room, you get the new version of that too. It's awesome, right? So it's basically showing you net, and we're seeing this is. I'll just show you real quick. This is what it looks like. Here's Mr. Nasdaq. So it's showing you net versus the way they have it now. They just show buyers and sellers, and it's you could see it looks like that. And you'll see like the buyers versus the sellers. You got to kind of guess what the difference is. This is showing you net, and then it's showing you, in the name of the algo, the new algo that they've added in here. I'll show you quickly. It's called. What am I doing? It's on all these, any of these. Open it up. Volume, pressure, and balance. That's the new one, right? That's you get access to that right now. I just gave it to my room yesterday, and then you can see. I'm seeing huge things with this. This will be on, it'll be on future webinars, how to use this, but as you can see spikes on this. Let's just get these off real quick to show you. So this actually, so I have this set in an hour. So it's showing me the heaviest buying and selling for the last hour, like this one over here, the time. Right here. This is the heaviest buying. 94%, and you set your threshold. So I set it at 70 for the last hour, the most aggressive buying, and it was into that iceberg at the time. They were buying the crap out of it. But guess what? That area held perfectly. Gone. Right. So I am seeing some major things with the new Market Pulse. I still like Tick Strike for now. I'm still using Tick Strike. I might still use Tick Strike because I like to compare them to two. Right. So you get discounts to this on my website. I've used this for 13 years. It gets real annoying when you have a position, you're watching position getting shoved up your you know what, and you get to listen to it. It makes it even worse. But this is imperative for my trading, so I can hear when other markets are firing off. If they're not, if I don't hear an SI event, I can hear like, hey, they're buying gold heavy or they're buying beans. It's very important to my trading. I'm probably going to use both in tandem. But Tick Strike is behind. Market Pulse is behind Tick Strike, the first version, in my opinion. But they're working on it. Are you trading futures from Thinkorswim? No. Trading. I do have my own private accounts, but I'm not trading those. On the webinars and stuff. Those are the Apex accounts. I'm trading Apex. Andrew Norton's in my room, so I think he's just talking about. Okay, I'm thinking R&R. All right, so that's about it for that. All right, guys. So I'm past the time. Nasdaq did something weird's going on. You just gotta let the market tell you, meaning let the volume events tell you what to do. All right, so this is already ATR, retest failure. I'll go long. If I get a short, I'll go short. What I did see, what you do see down here, look at what's starting to populate down here. This liquidity has been in here basically all morning. So if I get a short setup, you can bet your bottom dollar. Are they on the webinar? Did you just see that? How funny is that? The minute I said it, they just pulled the liquidity. That's ridiculous. Whoever's on here, you're not fooling anybody. Whoever this is, that is the minute I pointed it out, they pulled it. They're like, oh, we better get that out of there. They're seeing our games. So anyway, that's not there anymore. So forget that idea. But anyway, like I was saying, this right now it's bullish, but keep an eye on these zones. You can go back and watch this webinar, and you can copy these zones for now. You get these zones in my room. This is the next zone up. This is getting really close to a fail breakdown, and as are like really close. A little higher here. This will probably do that over the next couple of days. So this needs to stop here now if I want to fulfill my wish of 0. So got that on long. All right, not that up, but I'll play a retest failure long there. I'm long natural gas. Sellers aren't doing too well in there that we saw in the CBD, and I'm long beans. Crude, I'll go over there and draw zones there too. So hopefully you guys are learning a little bit here what I'm doing. This is the ultimate edge. These SI indicator setups. If it wasn't for Bookmap, I would not be trading. I told you guys that before. It is got me back in the game, and it's the most powerful thing I've ever seen in my life. So highly recommended. All right, guys, I will see you. I do this every day in my trade room, twice a day, except Fridays. Friday afternoons I play golf, so I can get away from these things for a while. I will see you in there. I'll see you next Thursday. Thank you for joining.